Well, good weekend, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Friday, the 27th of January, 2023. It's your weekend edition, so we're going to look at weekly charts. But I want to remind you of something. If you don't learn these Bollinger Bands the way I teach them, I think you're really missing out. It's not just the band. It's the combination of the slow stochastic study, which is momentum with them. Where do you come out? When do you come out? When do you cut a position in half? When do you see a reversal in market? Because often momentum out of the slow stochastic with the Bollinger Band will reverse before prices. I know it sounds crazy, but it's what it does often. How do you learn about it? You go to our website. By the way, at any time during this, you can just move your cursor up here. You will see an icon appear. It'll take you into the education area. Read about it. Look at the video I created on this. I think it's going to fit in. It's really inexpensive, okay? And it's going to stick with you, I believe, your whole trading career. So the good news is, I just heard on the news that in Chicago in the month of February, right now coming up, we're going to gain an hour of daylight from beginning to end. We're gaining over 2 minutes a day right now, and it's going to be more than that. So it's picking up its momentum, which means we're at the change of season, okay? Once that dark goes away, because if you live in the Midwest, it gets dark 3:30, 4 o'clock. And, you know, with more daylight, we get warmer. A lot of things are going to change. And let's talk about that warmth, because the Fed has to feel real cuddly tonight. Their PCE, the core PCE year over year, is slipping, just what they wanted to do. It's not collapsing, it's slipping. At the same time, spending is dropping a little bit. They need that. Now, the last part of the puzzle is, what do they do about the labor market? And they haven't figured that one out yet. And I don't know if that they can. It may not be the worst thing. The economy's slowing down, people still having jobs, they get scared with all that's going around them, and they're holding on to money right now. That's not as much demand. You can set back a little bit. Nothing wrong with that. But what it also tells me is the rate hikes for the dollar are probably coming, the end of it in sight. Do I think you're just going to be one and done in February? I pray not. I want the Fed to at least go one after that, maybe two. Let's see that the data stays in place. You don't want to call Fed Chair Powell Volcker. Double last name. You don't want him to have to go down and back up. You don't want to see that. Okay, so when I look at the gold market, and by the way, I left on here all the different studies. I don't know if I showed that enough, but these are just some. I have more. I created a lot of this charting software, so all the different studies I want to put on, Fibonacci's, there's Gann, there's everything you'd want in there if you use that type of information. But going back to price, and I'm going to leave that up there. I rarely do that. We're back on the weekly chart into the resistance area. The last rally high of importance was 1949.20. You plunged down into the 1650 area, and you've made it back up. Expect some natural resistance up here. On the weekly chart of closes, 1985 is that number. I've shown it to you all week long, and you've got as high this week as 1949.80. You're in the ballpark. Number three, certainly still looks bullish here. Nothing has changed on that chart. You still have higher highs, higher lows. The weekly chart looks very good right here. You might even, over the next 2 to 3 weeks, listen to what I said, not this coming week, the next 2 to 3 weeks, maybe can get the 18-week average of closes over the 100, 1803. That would be a very bullish event. Why? What that would do is put the shortest term average, the 18-week, over the 100, and the 100 over the longer term 200. The bulls are going to come out screaming that this market's ready to go. When you look at where we're at, we've been running the resistance of what I talked to you about, the Bollinger Band. You see how you keep running it? You've stayed under it. And that's just what a classic bull market does when it has an embedded reading. So you're going to say to me, well, Ira, you're talking that maybe there's a pullback. You can afford on this chart right now a pullback. Nothing's going to fall apart the way it is. You'd have to get under this number, 1719, to break the pattern of higher highs, higher lows. The daily chart is showing the more pronounced weakness for the April contract as people have done their roll from the Feb over to the April. So expect a little bit. But longer term, I still think the big picture is to the upside. Now, this is the important time for the gold-silver ratio. The correction on the weekly basis has gone about as far as it has to. This doesn't mean it can't go further. I'm not good enough to pick, at noon on Tuesday, it's going to make that. But as you can see, the last time you did this, you rallied here and then you fell back. Well, if you're going to fall back, silver's going to get stronger than gold. I don't know when. I don't know what will cause it. You're in the ballpark area. That's all. When you look at the silver chart, what you've really done is you've backed off riding the 100-week average of closes. And if the market starts popping over last week, not this week's high, that could give you some momentum to the upside. But not picking a bottom, not saying it's a buy either, giving you what the chart might do. Copper's at a zone where I think it's in resistance. The markets are waiting for the Chinese purchasing managers to all come back, start buying copper for imports, whatever they're going to do. It's Lunar Week. It doesn't end until February 5th, but a lot of the traders come back earlier. I've seen that. Remember, I've done this my whole life. So lunar holiday is nothing new. I've seen how they do it. At first I said, oh, they won't be back for 2 weeks. Not how it works. Companies start saying, hey, it's time to come back. You've had your family week. Let's get going with business. In the platinum market, you've got the momentum, up, but you're in a bearish trend. Lower highs, lower lows. So between the 100-day, the 18, and the 200-day, this area is where I'm looking for the support. And in the dollar, you have the embedded reading. You've gone into a pause. You accelerate. If you get under 101.26.5, other than that, the market might want to hang there if it doesn't do that and see what the FOMC meeting says and then make some decisions. I don't want you to wait on that. I want you to take your cursor, move it up here, get into where we told you. Get in and learn this Bollinger Band. You hear me talk about it all the time. If I had to do one thing to trade, I would abandon everything and just trade off this signal. I'm Ira Epstein. I will see you come Monday.